Hi everyone, this is Rob Roy of Elliott Options, and welcome to TradeFinder Live. As you can see, I'm still in the mountains, and if you watch the SPY update over the weekend, and if you haven't, by the way, if you're live streaming, welcome, glad to have you. And if you are on YouTube, please go to our channel. You can check out all of the past SPY updates. But over the weekend, talked about a snowstorm they said was coming, and they weren't kidding. So when you're on top of a mountain, when it snows, you're kind of SOL, because the salting trucks stay downtown. They don't come up the mountain. But it was certainly beautiful to see, something a native Floridian doesn't get to see very often. So that worked out great. So again, welcome to all of you that are live streaming on the separate social media platforms, and to all of our TradeFinder subscribers, welcome to you as well. The way TradeFinder works, if you're brand new, welcome to you. And we go through this disclaimer because it's a requirement. It is important. A couple things that the powers that be want us to make you aware of. Number one, we're not registered to give individual investment advice in the United States. And number two, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. That's because we have a lot of international viewers. The rest of it's very important. So if you haven't seen this before, again, please take a screenshot of it, read it in detail at your leisure. So the way TradeFinder works is we'll talk about the markets, and we've expanded that. We talk about a number of different markets other than just the SPY. And when we start talking about some of the international markets, please don't tune out if you're only interested in trading the US market, because all of the symbols that we show you are tradable on the US market. So there could be good patterns, as you've seen in the DAX, et cetera, that are tradable, other countries, patterns that are tradable on the US markets. So we'll go through all that, and then we'll take a look at a case study alert that we may have closed for our alert subscribers, give you an idea of how that works. Then we'll go through and look at previous case study considerations that may consider to be still open. Difference between a case study consideration and an alert is our alert subscribers get alerts through SMS, email for entries, adjustments, exits, etc. When we do this TradeFinder, we look for a case study consideration, and then you kind of on your own from that point. So that's the one of the significant differences, along with access to a tremendous amount of education that we have on our website for our alert subscribers. So then we'll go through and see if we can find a case study consideration for tonight. And with whatever time we have left, we'll open it up to Q&A. You ask anything, but usually that amounts to you guys asking about your favorite stock symbol. We take a look at what our indicators may have to say about your favorite symbol. That's it. That's how TradeFinder works. So again, welcome to everybody. And let's go ahead and get started by taking a look at the market. And you can see that we had a down day. The most important thing to look at, I think, on the market today is the fact that where we closed near the lows of the day, not on, but near the lows of the day, is pretty good separation from the 10-day moving average. So possibly a little bit oversold at this point in time. Remember, markets can stay overbought, oversold for short periods of time, but not long periods of time. So we could have another down day or so, and I'll talk about where we might find support in a second. But one other thing that I wanted to make you aware of is you can see this lime green line here crossing the fuchsia colored line. That's a 1030 bearish cross there. A lot of floor traders, institutional traders look for a 1030 cross, whether it's to the upside for a bullish trend or the downside for a bearish trend, for the potential of an emerging trend, not just short-term movements one way or the other, but the potential that we're actually going to move into a trend for a period of time. So there's not a whole lot of whipsawing between the 1030 cross, as you can see. There's a little bit right here where we had a bearish cross, and then we turn around and reverse, but it doesn't happen too often that you get a clean cross and then it turns around and goes right back the other way. Sometimes, but not that often. So it's something to be of noteworthy. And so the next level of support, we talked about this in the SPY update as well, would be down here at 450. You can see that was the highs from early September. So we tested that level in the beginning of December, ran up, came back down, tested it in the middle of December, ran up again, and then here we are on our way back down. So what happened today that may have moved the market? As you know, the markets were closed yesterday for holiday, so we had an extended holiday weekend. Well, interest rates. I've talked about this numerous times. That has been my view that as interest rates go, so will the markets. And the interest rates, a big jump to the upside today. I've also said that I think the markets can handle rising rates until we get to 2%, unless it goes too vertical. That scares the market, and you can see with the gap up and the move to the upside, a big move in interest rates today. Market just doesn't like that, and there's concern about how far can it go. I think that 2% handle, when we get to a 2 handle on a 10-year, it's just the market is going to not handle that so well. And man, it's already not handling it very well. So do we get any sort of a pause here in interest rates? Do they calm down a little bit, or is it going to continue to go that vertical? You could see that we had a pretty good spike here and then calm down a little bit. And now it looks like maybe another run. We're in a wave 3. We take a look at the DMI, our favorite confirming indicators, a number of them that we like, but that's our favorite one. And that looks pretty darn solid. The ADX is up to about 30, got good separation between the two directional indicators, positive moving up, negative moving down. Certainly looks like that trend is going to continue. It doesn't mean it has to continue in a vertical move, but it shows that there's strength behind this move and probably going to continue, whether or not it takes a pause for a day or two or not. The trend looks pretty strong. So higher rates, it's going to be a struggle for the market, especially for tech stocks. There's a pretty good rotation going on in the market. We'll look at financials because you might think that that's a good place to be. We had a case study consideration on those last week, and had a little bit of a tick down today. So we'll cover that when we get into the case study considerations. But I did want to show you immediately interest rates, because in my opinion, that had a lot to do with why the market's traded to the downside. Futures were initially up, and then once interest rates started moving, then things changed significantly. So let's take a look at some of the other markets. We'll look at the Dow via the diamonds, the DIA. A lot of our subscribers, alert subscribers, like to look at the Dow, and you can see that's pretty ugly as well. And then we put the Elliott wave pattern on. It's creating a wave 4, and that could be encouraging if perhaps we're going to find some sort of support here for a move back to a wave 5 high, a new high in the market. You can see we're at a 53% corrective level right now. If we look at the moving averages, not quite that bearish cross yet, pretty darn close, but it's not there. And it has to actually happen. It just works the same way as it does with our DMI. The indicator can look like it's setting up, but if you don't get the exact signals, sometimes it looks like it's going to, and then it rolls over. Same thing happens with these moving averages. The crossover has to actually be a clean crossover. Just because it looks like, all right, tomorrow that 10 days going through there, it may not. It may bounce up. But so we'll see if that happens in tomorrow's trade. You could, if you really wanted to look for some bullish things to grab onto, you could say you got a little bit of a pattern, at least if this holds here, of higher lows since the beginning of December. And if the wave 4 holds and starts to head back to the upside, you make a pretty strong argument there that a little bit of an uptrend, got a wave 4 right at 50%. It could even creep down a little bit to the 61.8% level and still be a very qualified Elliott wave 5 wave impulse pattern to the upside. So long story short, the diamonds, the Dow looks a whole lot better than the SPY does right now. So let's go ahead and take a look at the Qs. People ask about that all the time, so we'll talk about that. And the big news with the Qs today is we broke a level that we've been talking about for the past couple of weeks that we needed to hold, and that was at 380. So we needed to hold that. Sorry about that. Let me get this stuff off. I have no idea what that stuff is doing on there. All right, so back to talking about the Qs, 380 sitting right here is a level that needed to hold. It didn't, and so kind of a follow-through day today, if you will. If you look, you can see we closed below it, actually right on it on Friday, and then down below it again. It's better when it's 2 days in a row as far as the follow through day. We had this drop down here. It closed below it on the 13th, and then the 14th closed right on it, and then this. So it's not the cleanest follow through, but you can see that the market's struggling with it. And then we have the low here from the 10th, where we traded all the way down to 370, and that's right about where we closed today. So looking pretty weak on the Qs. The 71% wave 4 corrective level doesn't 100% disqualify the pattern, but it's pretty close. Elliott himself didn't like that. If you follow along with the other wave and Fibonacci level rules, you can stay in there on a wave 4 corrective level up to 78.6, but Elliott would write that once it got to 70%, he was thinking that that's going to be a disqualified pattern. So we'll see if his musings were accurate here. You have seen some 70% hold and go on and make a wave 5 target in the past. So it's kind of on a nifty level. But if this wave 5 becomes disqualified, then the likely move is right down here, retrace the entire wave 3 all the way down to 350 on the Qs, and just kind of seems like that's the likely move at this point in time with the Federal Reserve's rhetoric, et cetera. It's just going to be a struggle for that market moving forward from here. The IWM, we noted that last week on how if we broke 210, we could have a really significant trade to the downside. This was even in the SPY update, and I'll show you why here in a second. And look what happened today. We broke below that. Now, if we don't jump back above that tomorrow, watch this. I'm going to switch it over to the weekly chart. And again, I invite you to, especially those of you watching on YouTube, go to our channel and take a look at that SPY update. But look, you can see that for the entire year of 2021, and if you visited us at TradeFinder before, you know that we've talked about this 210 to 230 range that the IWM was in for all of 2021. It tried to break to the upside here going into December, and it couldn't hold it. And we came back, we tested it there at the end of December, bounced back up right into the midpoint. And here we are, had a doji last week, and we're starting off with a bar to the downside. So what I wanted to note, or wanted you to pay attention to, observe, if you will, is a break of this 210 level means that it's pretty much Katie bar the door, watch out below, because that move to the upside that occurred back in September and October of 2020 was pretty vertical. That was a big run to the upside, meaning that breaking that major, a major support level that's held for a year, there's no resistance on the way down because of how vertical that move was to the upside. You could make an argument that there might be some right there, but it would be hard to draw that line there without saying, oh, we're just going to come on down and fill this gap here from October, November of 2020. So that's significant. That could be a great looking downside trade, but we have to see, first of all, do we close below 210 on this week? And if we do we get follow through? And we'll be paying close attention to that for our subscribers on the daily chart, because I think that could be just a fantastic trade. It's a vacuum underneath, and those are the types of things that you look for. I've been teasing our subscribers for a very long time on how much fun it is to trade the downside market. And I say that with hesitancy because I know more people make money when the market goes to the upside, people with their IRAs, 401ks, et cetera. It's just better for everyone involved when the market goes higher. But if you're an options trader, especially with how fast the market moves to the downside and the increase in IV and puts, et cetera, trading the downside is more fun. It just is. Things happen faster. You make better returns, et cetera. At some point, we are going to have a down market. Maybe we're moving into one now. We're not quite there yet, as you've seen from the charts, but perhaps we're moving to one. Breaking that 450 level changes everything. That could be a significant move down in the SPY as well, but we'll cover that more if we make it down to 450. But I did want to share that with you, the weekly chart on the IWM, because that's something I think everyone should be paying attention to. Bitcoin, and its struggles that it's had trying to hold on this 40,000 level, and it's doing its best. to hang in there, because if it doesn't, we had mentioned if it breaks 44, it's going to 40 pretty quickly, which it did. And if it can't hold 40, then the next stop is likely 32. So needing to hold in here at this 40,000 level is very important for Bitcoin. And we've discussed in the past, I won't cover that again, some of the other ancillary things that are going on with Bitcoin, et cetera, the rhetoric and the financial circles and all. And there's so many different cryptos out there now. And this whole metaverse thing, it just goes in on and on. We could probably do an entire session on all that stuff one time. Maybe we'll do a special session on all those types of things in the crypto world. So taking a look at that is trying to stay in this channel the way it did back here in September. You can see it held in the September range right here between 40 and 44, and then it took off to the upside. Can it do it again? Well, we've got a 74% wave forward. So there we go with that 70% thing again, where Elliott would say, I don't know if we're going to go up and hit a wave 5 target here, but it hasn't quite hit 78.6 yet. And if it breaks 40, it's going to hit 78.6. Because again, there's nothing stopping it until it hits 32. So a lot of precarious things here hanging on by our fingernails in a lot of different areas. And we take a look at the XJO, and that's been I talked about this last week, and it looked like maybe the XJO was starting to form a bit of a triangle. And boy, it really did form a nice one after that chat. And so you could draw a line there. You could come over here and draw a line through here, regardless of whether you call it a symmetrical triangle or an ascending triangle. You had resistance there at 74.80, and then, the higher lows. And so there's the breakout. So it's breaking out of that triangle to the downside, but look where we are here. This wave 4 hit the 61.8% fib level. It's my favorite fib level because it's the strongest of all, in my opinion. And so can it hold there? Maybe. If it can hold there, then there's a reasonable shot of moving up to the wave 5. But breaking out of the triangle there is certainly something to keep an eye on. If it follows through, then that impulse pattern is going to be gone by the wayside as well. And then you're looking at a retracement of that impulse pattern, and that brings you all the way back down here again. So those are some things to watch on the XJO. Do we get follow through to the downside there or not? But pretty interesting with that breakout, but a 61.8% wave 4 correction. So a little bit of a dichotomy there, pretty clean break to the downside, but right to a very strong support level. So we'll see where things go. Last week, we were looking at the Nifty, and it was probably the strongest of all the markets. And then just right on cue, it breaks back down. So now we're back down to this 49 level again, which is very important. Can it hold 49? If it can, then we can move back to the upside. But now you're starting to get too many attempts here of breaking this 51 level. So that's starting to become pretty significant resistance. So the best thing to hope for, I think, would be to stay in this channel between 49 and 51. Last time we broke down below it, we had a pretty good break. You can see we had a little bit of a triangle here, which broke to the downside as well, similar to what I was just talking about with the XJO. Is that what's going to happen there? But it rallied back, got back above 49. Looked like we're going to take another run at 51, and now here we are back below the 10-day moving average, back down to 49 again. So you're seeing some global weakness, which I think is something to note. We'll take a look at the dollar as well. I've been talking about how that has something to do with in my opinion, whether or not this weakness will be global, or is it just a period of time where we're going to withdraw liquidity and it's going to be a struggle for the markets to move forward. But you can see here this wave 4 on the DAX hit that 50% level just dead on, started down, came back up, tested it, and now we're heading down again. We've broken below all major moving averages. It looks like the DAX is on pretty good path now to go down to that wave 5 target. Remember, this was originally a wave 5 over here where the 3 was. It hit that target and then it relabeled. So we hit the wave 5, it relabeled to a 3. We get the wave 4 correction, and now it looks like a 5-wave extension to the downside here. So something to pay attention to on the DAX, is that could be a very good trade as well. So the news isn't super positive as far as bullish chart patterns, but from a trading standpoint, it is starting to get pretty exciting because it looks like we could be setting up for some really good downside trades. And I've lived through markets where just as fast as you could put the trades in, you're as fast as you could type getting them in, because there's so many of them. When everything starts going down, there's just great trades everywhere. Let's take a quick look at the dollar, and then we'll move on, as I wanted to show you how it was started to break down a little bit. But look what happened today. It didn't make sense that we had a tick up in interest rates, I didn't think, and that the dollar got hit. It just didn't jive. And stuff that we talk about in our insiders meeting, which is what we do every Thursday night for our alert subscribers, was talking about how when correlations occur in the market, sometimes they get discombobulated, if you will. They get out of whack, but they usually don't last very long. Usually when one of the correlations becomes uncorrelated, if you will, it doesn't take long for things to move back in to kilter. And so seeing the dollar gain some support gives me a little bit of comfort. I'm in favor of a stronger dollar. And if the Federal Reserve going through and raising rates and then withdrawing liquidity, if that doesn't support the dollar, that to me smells of significant global economic weakness. And I just don't think that's a good thing for anyone concerned. A decent correction in the market, that'll be fine. We've had a nice run for a while, but if we lose the dollar, then I think we have bigger problems to worry about. So I wanted to go ahead and share that with you. So that's a pretty good rundown of what's going on in some extended markets on our end and the international markets. GLD is still consolidating, so won't talk about that too much. In the next SPY update, we're going to post on YouTube this next weekend. We're going to talk about copper again. So we'll feature gold, silver, and copper. So if you're interested in the metals, keep an eye out for that one this coming weekend. All right, so moving forward, the next step is that we take a look at some of our case study alerts that we have closed out for our alert subscribers, and I got something really interesting to show you. We did last week, if you happen to see it, we did a special presentation for all our TradeFinder subscribers, and we talked about our new time strategy that we are launching. And there's a very special, big special right now. You can get it for $69 for the first 2 months, $69 each month for the first 2 months. But there's only 2 days left, and I've asked the support staff to put link to sign up or information to sign up in the chat box. So you only have 2 days left to get that special price of $69 each month for the first 2 months. But we closed one of our time strategies, so I thought I would go ahead and here it is, right on cue. This is how it works. And some very interesting things for you to pay attention to here. And if you didn't see the recording, take a look at it. You can find it on email. The information was sent out to you, and take a look at the recording, and we will I think we're going to have a great year moving forward with this, not just because the strategy is cool and it's AI based and all the technical cool stuff that goes with it, but I think the market, with what's occurring in the market, the timing could not have been better for this strategy to come out. And here's the gist of it. So the entry alert was sent out on QDEL on December 27th. And just like every one of our alerts for any of our portfolios, it looks just like this. We have all this information, including a chart, along with the trade, a description, etc. And so you can see here we have this set up, and support was down at 120. Often earnings are instrumental in finding these stocks that drop. So what we're looking for is a stock that has a significant drop and then has a high probability of staying in a trading range. So you get two things. You get a spike in IV. If you do a put calendar spread, you're selling that implied volatility, the high implied volatility. So that's like, usually it's almost like free money coming in, because you're buying a long-term put as well, and you're selling a higher volatility than you're buying, and you're buying and selling the same strike, different months, but the same strike. So the volatility on the short-term option just kickstarts the trade, gets it coming off. And so you benefit from that, and you benefit from time decay, and you have a long put for protection, because you can see that supports there's 120. What happens if that 120 level breaks? Well, you got a long put, so you're okay. And I'm going to show you exactly how okay you are here in just a moment. So the exit, we exited on the 13th. And you can see here was what was going on. Now pay close attention to this chart because I'm going to show you where the stock is currently now. Here's exactly where we were at the moment we sent the alert out. You can see that we were starting to break down and we're getting awfully close to that 120 level. And that's going to be where the greatest amount of profit lies if it stays right in there. It doesn't have to be there to be profitable, but that's a good amount of profit at that point in time. And so you can see the way this turned out at that point that we sent it out. It was a 38% better than a 38% gain in 16 days. And the time frame is right around 21 days. That's what the AI tells us. Now we exit a few a little earlier like this. We may have a few that go just a little bit longer. Sometimes the short option may go to expiration. Not always. This one didn't. It was a January short put. So 38% in 16 days is pretty good. And you can see from the mark-to-market graph there that it wasn't below the zero line much and then took off. And this is a really good example of how a lot of these trades work. Some of them generate really nice returns on there, but this is a little bit more in line of the average. Now, notice that the price, we sold it for $4.90 to close the position out, and that was an actual fill price. You can see we note the actual fills in addition to the alert prices that are sent out. But take a look at where the chart is now. So if we go back and look at this as it is, so here's where we finished on the 13th when we sent out the closing alert. So you can see it broke below 220. It continued down the rest of the day, and then there's where it is now. So it's down all the way at 110. So it did break that level of support at 120. And you might be thinking, oh man, that was great timing on the exit because you would have just lost all of your gain. And that would be a fair thought. However, because you have the long put as protection, we didn't lose all of the gain. In fact, right now, after the close today, it's still trading at 425. And if we go back and look at our entry price, the entry on this was 355. So even though it broke that support level at 120 and is all the way down at 110, this would have still been a profitable position from the entry. So our timing was really good. We generated a greater return than we would have, but even with breaking below the support level, it still generated a return. It's a fantastic strategy. I invite you to learn more about it. If you're hearing about it for the first time, for those of you live streaming, whatever, please check into this. Again, as the support to put some information in the chat box for you so you can learn more about it. But really stellar stuff, and you had two days left to get that price, which you're not going to see again. That I can promise you. That's not BS. That's the truth. All right, so now let's move into some of our recent case study considerations at previous trade finders, and we looked at a strangle on Iron Mountain back on the 14th of December. And take a look at this. We looked at this and it was breaking to the upside. And when we looked last week, pretty significant turnaround here. Watch what happened to this. So there was where it looked like it was moving to the upside, and then whoosh, big move lower. We don't advise this, and I probably shouldn't even bring it up, but had somebody taken off their calls there and held the puts, there would have been a grand slam trade. But we don't talk about that. I talk about being very careful before you take one leg off. And this is actually the example of why. Can you imagine if you'd done the opposite? It's breaking to the upside, and now you're starting to think, well, I'm going to take the put off because this is clearly an upward breakout of the triangle. So I'm going to take the put off and let the call run and make more money that way. And then the reverse, and then you get wiped out on the position. So that's why we always encourage our subscribers to be very careful before taking one leg off. Don't want to do that until you're profitable on the position, to where the worst thing that can happen is you break even or have a little bit of a profit. Well, then you can take one leg off and see if the other one runs. But we tend to close the position out the majority of the time, regardless of whether or not there's potential further movement. And then on the 4th of January, we looked at this one on CMC. Been trying to find an entry here since then, because that was such a good looking setup. And you can see that we are really testing that previous wave 5 high. So we have not sent this out as an alert to our alert subscribers yet, but this is on the watch list every single day, looking to see if we're going to get break from that 36 level, a significant break higher. You look at the moving averages and we close right on the 10-day moving average. So you can see there's a little bit of seesawing going on right around that 36 level. So as long as it stays above it, we're going to keep an eye on it, especially as the DMI is still constructive. It's not as great as it was a few days ago or end of last week, but it's still very constructive as far as a potential move higher from there. But as far as our case study consideration, you can see it was trading at 37.60 and it's now trading at 36.51. So it's lost about $1. But as long as it holds above 36, again, I still think it's a viable consideration for a move to the upside. And then here's what I was talking about with the XLF. And we looked at this last week, thinking that, okay, we've got the interest rates moving to the upside. That's a great scenario for financials. You can see that the DMI was looking really good, pretty solid there. And then we've had a little bit of a blip on the radar. And now we're down here testing this area right through there at 40. So what's going on? Why is this struggling here when it looked like we had a really good, strong DMI to move to the upside? Well, what's happened is there's been a lot of earnings from financials that are located within the XLF, and they've been underwhelming. Goldman Sachs today, just some of the big financials have had, as I said, underwhelming earnings reports. And so that's taken a little bit of a tick down on the ETF itself. However, I think that's short-lived because we're moving into an environment which is great for financials. As rates go up, they make money on the spread, and the wider the spread gets, the more money they can make. It's just interest rates hadn't been high enough long enough for it to reflect in the last quarterly earnings. So as they're reporting earnings from last quarter, it's not showing the potential that they have for moving forward this quarter yet anyway. And so I think this is temporary, but we'll see. We'll follow the charts because what I think doesn't matter. Nobody cares what I think. Markets certainly don't care what I think, but we trade technicals and we follow along with the charts. But I thought I would share that information with you because you're probably a little curious from a common sense standpoint, even a fundamental standpoint with rates going up. And I showed you the 10-year. It's like, well, why aren't the financials bouncing? It's just because there's been some negative earnings or earnings that disappointed. I think maybe people are already looking ahead and thinking that we should see some of those better earnings already, and it hasn't quite materialized yet. But I think it's coming. We'll see. But again, we'll trade what the chart tells us. So that's the ones that you might consider open that we've looked at over previous trade finders. And at this point, we'll go ahead and see if we can find one for tonight. And then with what time we have left, again, we'll open it up for case study or questions, Q&A. You'll see if you have any symbols that you may want us to take a look at. All right, so as we bring this up, and by the way, if you're new to this software, if you haven't seen it before, it's called Profit Source. You can find out more information at hubb.com. It's the best Elliott software out there, in my opinion. And one of the primary reasons, one, the charts are very clean. People always comment on the videos on how clean the charts are, and I'm always getting asked, what program is this? But the thing for me is that I'm a big believer in Elliott, and it's programmed exactly to the mathematical algorithm that Ralph Nelson Elliott wrote. There's a lot of Elliott software programs out there that have people's personal adaptations of Elliott, and I guess unless you're in their head, it might be difficult to decipher if you have a general knowledge of Elliott. So anyway, that's just, again, my opinion. I've tried all the ones that I know exist, and I think this is the best. And then over here, a lot of our alert subscribers, because I use it, we're using it as well. And so you can see here that the EWO listings are here. Those are my searches. And if you're an Elliott Options alert subscriber and you have Profit Source, you get access to all of these search parameters as well in the pre-computes. Now you can create your own search. So if you have a search that you want to go through and create on your own, maybe you have your own technical indicators that you want to see, etc. then you can do that. It just takes a little bit of time to run the search. The pre-computes, as soon as you bring it up, they're there and they're ready to go. So it's just a time saver, but it's a nice feature. Now you can see that even with the down market today, we still have a bullish result. So let's take a look and see what that is. And it's a financial. So that makes sense, right? SLF. You can see that we're right here. And boy, this is one that you'd be tempted with, but kind of want to see it break that 58 level first. So if you look through here, right at the 58 point, let's say, take a look at the DMI, looks like it could be setting up pretty well. And again, it's in the right sector, in my opinion. So let me take a look at the DMI. Breaking above 20, good separation between the two directional indicators. This wave 5 is actually disqualified because that wave 4 is at 79%. So that's the 78.6% fib level, which technically disqualifies it. So if this breaks this high, this chart is probably going to be relabeled. The Elliott software will relabel that into something different. But when you just look at the pattern with the stock moving to the upside with a supportive DMI, showing you that the likelihood is that it will break higher from here. But let's see what else that we can find rather than one that's at a major point of resistance. I'd feel a little bit more cautious and wait for it to break that level, and then it could be a big run to the upside. So it just seems like patience is warranted there. Let's do the Missouri thing. Show me, break through that 58 level first, and then we'll take a look at that one. So let's see what we can find on the corrective side. And nothing on the corrective side. So we'll go to consolidating stocks, and now we have 99 of those again. So that's pretty interesting. We had gotten down into like the 30s, which is really low for the number of consolidating stocks. Now getting back up near 100, pardon me, which is where things usually stand. Let's see if we can find any, since we don't want to look at 99 charts. If you click here on bullish wave 3, now it merges the two. So are they consolidating, or is there consolidation within a bullish wave 3? That could be interesting. You would think that there might be some financials here. There's industrials, energy, mid caps. Wow, that's interesting. 2 mid caps, Vanguard and iShares. So let's take a look at that. We haven't talked about mid caps in a very long time. I don't know that there's the ADX is nice and low. So when we're looking for consolidation, we really like to have a low ADX, and that's low. So that part's good. I don't know that the pattern, I mean, this is actually an expanding triangle rather than a contracting one. If you've heard me talk much, I was rambling on last year about that. 2021, there were more expanding triangles in that year than I can ever remember. Usually they're contracting. Usually the triangles look like this. They're over on this side, and they're coming in through here, and you have the consolidation point on the right side, and the mouth is out to the left side. But an expanding triangle is the exact opposite. It still works the same way. They just tend not to show up as much. You don't see them as often. But maybe we're going to continue into 2022 with the same thing we did in 2021 and have a lot of them. So there's the point there, and the expansion, and being in a wave 3, looking at that ADX down around 12 again, but you've got a bearish cross there on the negative directional indicator, so you wouldn't pay any attention to the wave 3. So basically what we do is take that off, and then take the DMI off and just look at the pattern here and see if it's big enough. So 154 to 150 is only 4 points out of $150 issue. We're looking for separation of the mouth of the triangle from the high to the low for about a 10% potential move, and that's not enough. So forget about that one. Let's go back and see what else. The iShares shouldn't be much different looking, and it's not. Pretty much the same. So that's what you would expect there. So let's go back and Let's look at XEL, something energy based. I think makes a lot of sense right now, and right here around 69. Here we got another one where it'd be possibly a little more prudent to wait and see if we can gain some separation from that 68 level. But taking a look here at the ADX down around 12, may have to take that back. It is a pretty decent looking triangle there with a doji today. So this let's see if this is big enough, because this could be pretty good. I'm just afraid that triangle's not quite going to be big enough, but let's not jump the gun. There's good support right there. I'll show you that in just a second. Pardon me. When I'm up here and the heat's on, it dries my throat out, and I really struggle because I talk so fast, and I get the dry, itchy throat from the heat. So taking a look here, you can see that there's good support right in there at the 66 area, and then up to 70. So that's only 4 points again. And so that we would need closer to 7 between that, and we just don't have it. So that will look promising for a moment, but let's see if there's something else that may have a little wider triangle. This is more of a sideways consolidation here. That is definitely not what we're looking for as far as a potential strangle for a breakout. So we may be out of the couple more here to look at, and then we'll move on. Pretty nice looking triangle there. Nice ascending triangle. Not familiar with this stock. Corteva. Good support down there around 44, 49. So we make it on this one. So we'll use this. Let's take a look at the options real quick, see if there's enough liquidity. But yeah, that's a pretty nice ascending triangle with a good support there at 44 and a break above the resistance there at 49. It could really run up to that resistance level there pretty quickly. So, yeah, what was the symbol again? CTVA. Look on the NYSE. Well, it looks pretty good. Spreads they're a little wide. Spreads are a little wide, but not horribly. Yeah, all right. So we will take a look at CTVA for a strangle for our case study consideration for this week, and see how that goes for the coming weeks. I apologize. I know that's really annoying on your end. It's annoying in my throat too. All right, so let's open it up for some questions here in the last few minutes. Again, please take a look and visit that offer on the time strategy, because I think that's just going to be the place to be in 2022. Super excited about that. From Kev Rob, do you find the mouth of ETF triangles is often an issue? Yeah, that is an issue, especially when you're dealing with something as high as the XJO. And then the other issue is that the breakouts tend to not to be volatile enough. You can get good runs, but they tend to take a long time. So it is difficult on the ETFs to find a 10% correction. You're 100% right there. All right, George wants to look at the SMH and also USO, which that's a pretty good place to look as well. Looking at that seriously today. You hear all the crazy numbers about, and then, there was that attack in the UAE, which kind of shook the oil markets a bit. So maybe it calms down tomorrow. That was one of the reasons we didn't want to look at doing anything today. Didn't want to catch any vol spike on that. So the semiconductors, that's one thing that gets asked about, and I did not look at those to start. Good sector to look at. A little bit better looking chart, as you can see, trying to hang in there around the 300 level. Broke it today, but there's also support below it at 280. So a decent amount of support in this area, and it's only a 32% wave 4. So we could just be going through a normal corrective level here, if it is at all. I mean, if we bounce back to the upside tomorrow, getting close to that 1030 bearish cross and a break below the 50-day moving average tomorrow means a lot in the SMH. If it can't hold tomorrow, it's probably down to 280 and then tries to gather itself again from there. But if it can get back above 300 tomorrow, perhaps something could move forward. But let's go ahead and look at the USO as well. And you can see the move. Look at that. I mean, it's hard to chase that vertical move. Everybody that's listened to me has heard me say numerous times, I don't like it when things go vertically, because what goes vertically up, finish the phrase, usually comes vertically back down. And so we're a little bit overbought too. So, you can't chase that. At least I can't. It's too far from the 10-day moving average. And then we had the news and et cetera. But we could very well be getting a little bit of a pause or pullback, an opportunity, or maybe not. Maybe it just takes off and runs. But I do think oil is worth a look, as you're hearing prices as high as $120 a barrel in the future for oil, which is a bit of a scary proposition on its own right. So let's hope that doesn't happen. That's pretty painful at the pump if it does. Howard says the SPY is starting to look a bit like the IWM between 450 and 470. Yeah, and then that break today, as you saw. Bill's asking on Bitcoin. Let's go back and look at the chart of Bitcoin again. It's going to have to break above 44,000 before it's going to attract some interest again, and probably 48 to get moving back to the upside. At 74% there is just is right on the borderline of disqualifying this entire impulse pattern. So it's the opposite levels, right? It's got to get back above 44,000 and then runs right into another buzzsaw at 48. So Bitcoin's got some work to do, and it's just hard to look at it from a bullish standpoint until it's back above 48,000, in my opinion. I don't think it's worth taking a jump at now. Let it show it that it can get back above 48,000, and then you might have something there. But I'd be more concerned about a drop to 32,000 rather than a move higher at this point. Hopefully things change, especially for you, Bill. But it's hard to say there. SLV, and promise we'll get into the metals in the next update. But let's go ahead and take a look at the SLV now. A lot of people ask about the SLV. I think that's really cool. It's interesting how silver has taken over from where gold used to be. And it looks like we're breaking out of an ascending triangle here a little bit. We had resistance there at 21.5 and a pretty nice set of higher lows going through here. And so a break there, but we have to have a follow through day. If we do, then we could be looking at going back up to 23.5 there as a test of that resistance area. But we're not there yet. We have to have a follow through from today's attempted break above 21.5. We're about to get a bullish cross. In fact, if we separate the chart, it might have actually occurred today with that 1030 crossing above the or the 10-day crossing above the 30. So it looks like that was setting up pretty well. So silver looks pretty good. Good call. ARC, one of our subscribers, asked about this on Thursday nights a lot. And I mentioned that last week that this was looking awfully ugly, probably going lower. And it looks like that's exactly what's happening. I think, as sad as it is to say, that 60 level is probably within sight here, even though we're only at 80 now. That's kind of in free fall, and the stocks that are in here are not good for rates going higher. They just aren't. And so it's going to be a real struggle for this unless there's a pretty major rebalancing that occurs within the portfolio. And managers tend not to do that in these big ETFs. So that just looks like a good short to me, continuing to move further from here. Yeah, George, you can trade the Nifty in the US. And good question, Cindy. Apparently other people are saying what I've been saying, because Cindy says that everyone is talking about if the IWM breaks 210, watch out below. What if everybody is on one side of the trade? And that's a very valid question, because we talk about from a contrarian standpoint all the time. If everybody gets on one side of a trade, it doesn't take much to turn it the other way, right? Because everybody's looking one way. But I don't think that would occur initially. So if it first breaks 210, yes, a lot of people are going to jump on the downside. And I think it goes lower for a while. But there will be a point, very good question, there will be a point when it is too overloaded on the sell side, and then it could get a pretty good snapback rally. But I think it goes lower first before that occurs. But that was a really good question. We'll go ahead and take a couple more here. We'll look at PayPal Thursday night, and Don will talk about that Thursday night as well. Shop. Let's take a look at Shop. Good old Shopify. Not so good if you're long right now, huh? But there not much has been. You can see that we're rapidly approaching the wave 5 to the downside, and there's, I think we looked at this. When was it that we last looked at this? And this zigzag right here, and there's the 100% level. But look at where the 161.8% level is, exactly where the wave 5 is. So that looks like a pretty good likelihood of a C wave extension in the wave 3. It's one of my favorite directional patterns, is when you find a zigzag within a wave 3, and then we go and we look at the DMI to see if there's confirmation of a likely continuation. And in this case, there is. I mean, I don't put as much weight in the DMI to the downside as I do the upside, because the DMI tends to lag a little bit as an indicator, and things tend to move to the downside so fast. That's the reasoning. So I pay a little more attention to the 2 directional indicators on a downward move than I do the ADX. But it's hard to, if you're going to look for a DMI to the downside, that's what you'd want it to look like. So I think that looks like a really good short, Nicholas, down to that 161.8% level. In fact, let's keep an eye on that one. I'm going to put that on a watch list for the downside, just to see if that extension does indeed go on through to the 161.8. really intriguing when you get more than one Elliott wave pattern giving you the exact same price target. So you have a C wave extension on the wave, on the zigzag pattern, and a wave 3 coming down and merging at this wave 5 target. It all looks really good to me to the downside. Tesla. Take a look at Tesla real quick. And it would be awfully expensive, but you're starting to get a pretty decent looking setup for a strangle there, aren't you? I'm not sure if that's why the question was being asked, but that ADX is diving down. And then we have this really well-formed symmetrical triangle. And 900 up to 1200, that's 300 points. So that's enough of a move. So that looks really good. It just would be very expensive. It'd be a really expensive strangle, but if you have a large account, that looks pretty good as far as the setup. Otherwise, you wait for the breakout and you trade the directional move once the breakout occurs, and don't get caught up trying to pick a direction on something like that. Because look, it's got all the makings of a really significant move. Pardon me, one way or the other. Can see that. We got resistance in multiple levels. We got support down here at a level that closed the gap back from October. Lots of things to like about a strangle breakout on that one. Now that looks really good. Good call there. Jim says Amazon broke 3,200. Do I think it's going to 3,000? Because I had been asked if I thought it was going to go to 3,200, and we said, yeah, we thought it was, and it did. And it looks like it was trying to hold there last week, and we've got a doji today. So I think we have to see what happens tomorrow. Do we get any sort of a bounce back tomorrow? Possibly. But a doji right underneath that level, I think that means tomorrow tells the tale. If we can't hold that tomorrow, then we might be looking at 3,000 on Amazon. And so that was the question. Do I think it's going to hit 3,000? We're a little separated from the 10-day moving average, so we're a little bit oversold right now. But a break again tomorrow, I think, tells a lot. Issue could be that we could bounce tomorrow, right? We could bounce back up to the 10-day moving average, get back above 3,200. Then I think you have to be patient again and wait for another break of 3,200 and see if it moves lower from there. So MDB, take a look at that one. And it's going to try to find some support right here. This is an area where it may very well find some support right at 400. We got the 10-day moving average breaking below the 30, moving down lower, right there around 400. If it can hold that level, we could get a bounce. But if it doesn't, it's got a lot of congestion through here. So this is a tougher short. Pardon me, if you were looking for something from the short side, that would be challenging. Because look at all that. It's got a mess to go through. So the path of least resistance would be to hold here and bounce higher. But then you look at it, you can see, well, there's a qualified zigzag there too. Right there. But when that C level extension, the 61.8 on a 38.2% B wave correction is right there at 360, right in the midst of all that stuff. So perhaps we go down there before it tries to bounce. But going to be really interesting to see. All right, so we're out of time, but thanks everybody for viewing. Those of you again on the live streaming services, thank you as well. Thank you for putting up with my coughing here towards the end. I just want to get as much information out as I can. Sometimes I talk faster than my throat can handle, but I do appreciate your patience there. Sign off the same way every time. Time is the most valuable asset that we all have, and we very much appreciate it when you devote some of your valuable time to us, and then we in turn try to make your use of that time as informative and educational as possible. Thanks again. Have a great week. Look forward to talking again next week. Don't forget to take advantage